Hello, and welcome to Federal Appraisal LLC's online video series. Today, we will discuss the use of hypothetical conditions and extraordinary assumptions in appraisals. Appraisers frequently need to make assumptions concerning unknown conditions. Also, appraisers sometimes need to make assumptions that are known to be contrary to fact. When these assumptions have a significant impact on the value conclusions in the appraisal, they are known as hypothetical conditions and extraordinary assumptions. Such assumptions are appropriate for many appraisals. When made, these assumptions carry obligations for the appraiser, both in the required scope of work, research and analysis, and appraisal reporting. In layman's terms, an extraordinary assumption is a premise that may or may not be true in a given situation, but must be assumed to be true in order to properly complete the appraisal assignment. A hypothetical condition is a premise that is contrary to what is true at a given appraisal date, but is used for analysis purposes and to assess hypothetical value. Let's look at several examples of how hypothetical conditions and extraordinary assumptions are used by appraisers, and how they can have substantial impact on the valuation process. A common example of a hypothetical condition can be found in an appraisal of a property as if construction of the property were already completed or as if it were renovated, when in fact the property's improvements were only either planned or partially completed. These hypothetical conditions result in significant differences in value between the property as is versus the property in a hypothetical and contrary to fact condition, as if it were renovated. These hypothetical conditions impact the appraisal work when selecting and adjusting comparables, estimating income and expenses, choosing capitalization and discount rates, when estimating costs, and many other significant aspects and inputs in an appraisal. A common example of an extraordinary assumption would be for the appraiser to assume that a subject site is not impacted by any environmental factors such as contamination. Appraisers are not environmental engineers and would rely on an engineer's expertise to determine whether or not a property is encumbered by environmental issues. Let's say that the subject property being appraised used to be a gas station. Often, appraisers find that there is no information on the existence of environmental issues on the property. Without further information on the site, appraisers typically make an extraordinary assumption that the subject does not have any environmental issues. He or she would then resume the valuation process accordingly. If it were determined later that the subject has environmental contamination issues, the value conclusion from the appraisal would need to be revised, and the revised value could be dramatically different from the previous conclusion. All hypothetical conditions and extraordinary assumptions must be disclosed in appraisal reports. This is required by USPAP under its reporting requirements in Standard Rule 2-1 and other rules. Since clients and users of appraisals will utilize appraisals with hypothetical conditions and extraordinary assumptions differently than those without, they need to know about them. Of course, if clients and users are not notified about these assumptions, then appraisals could be misleading. Here's an example which, under varying circumstances, might require the use of either a hypothetical condition or an extraordinary assumption. Let's say an appraiser were to value an apartment building. Under normal circumstances, the appraiser has no reason to suspect that there is anything unusual about the property's condition that could affect value. Thus, neither hypothetical conditions nor extraordinary assumptions are necessary. However, let's say that the client discloses that there is a known construction defect on the property. Then the appraiser may assume a hypothetical condition as if there were no construction defect on the property. Of course, the appraiser may also appraise the property as is, reflecting the impacts of the known defect. Or the appraiser could appraise both scenarios, providing both an as-is value and an as-if value. In contrast, let's say that the client discloses that there might be a construction defect. In this case, the appraiser must make an extraordinary assumption that either there is no construction defect on the property or there is a defect or both. These scenarios are responsive to different appraisal problems and client needs that are necessitated by having the contrary or unknown information on the construction defect at the property. Some appraisals are very useful to clients for lending and investment due diligence support. Consider an example of an existing older office building. The appraiser might find that the value of the land as of vacant is $2 million and that the total value of the land and the existing building, which is in need of renovations, is $6 million. The appraiser further concludes that the building could be renovated for a cost of $1 million and the value of the land and newly renovated building would be $8 million. Or the existing building could be demolished and a new building built for $8 million and the value of the land and brand new building would be $10 million. These various development scenarios cannot all be true as of any given moment in time, and so some of these values are based on hypothetical conditions. Prudent clients and appraisal users have good business reasons to need to know the values under these various scenarios. In this example, the client would surely benefit from learning that the renovation project produces the greatest profit. There are two common misconceptions concerning hypothetical conditions and extraordinary assumptions. Every hypothetical condition and extraordinary assumption does not need to be reported in a report section labeled Hypothetical Conditions and Extraordinary Assumptions. They merely must be reported in an appropriately communicative section in the report. USPAP does require a statement that the use of hypothetical conditions and extraordinary assumptions might have affected the assignment results. It is not clear within USPAP what the difference is between ordinary assumptions and extraordinary assumptions in the appraisals. Whatever the distinction, good practice dictates clear, concise, and conspicuous reporting of all major or unusual assumptions. There are countless examples of how hypothetical conditions and extraordinary assumptions can be used in different scenarios. Federal Appraisal LLC has experience with hundreds of appraisal problems which have required the use of hypothetical conditions and extraordinary assumptions. If you like this video, please hit the like button and subscribe to our channel for more videos like this.